Hello everyone, welcome back to my YouTube channel. In the last class, we solved a practical problem related to trading and profit and loss account, right? So in today's class, we are going to learn a very important concept under financial statements, that is operating profit. So let's start it. Operating profit, it means what? It is the profit earned through the normal operations and activities of the business. It is the profit earned through normal operations and activities of the business. It means what? It is the profit a business earns only from its regular day-to-day activities like buying, producing or selling goods or providing services. That is what operating profit. So next point, this is very important, so listen very carefully. See here, it does not include income or expenses that are financial or unusual in nature. It does not include income or expenses that are financial or unusual in nature. Means while calculating operating profit, we ignore income and expenses that do not arise from the normal business operations. Clear? Normal business operations means what? Buying, producing or selling goods or providing services. But here this operating profit, it does not include the income and expenses that do not arise from the normal business operations. Clear? Then what we have to do? We need to ignore the income and expenses that do not arise from the normal business operations. Clear? Here we have to include only the profit that is earned through the normal operations and activities of the business, and we ignore the income and expenses that do not arise from the normal business operations, means not from buying, producing, selling goods or providing services. Clear? So let's see the examples not included in operating profit, that is financial in nature. Both financial in nature and unusual in nature we need to ignore. So let's see the examples of financial in nature. See, interest on loan, interest received, dividend received, profit or loss on investment. Right? Means these examples, right? These arise due to how the business is financed, not because of business operations. Clear? These arise due to how the business is financed, not because of the business operations. See here, interest on loan. Interest on loan, it is financial in nature, right? Why? Because it arises due to borrowing of funds and not due to normal operating activities of the business. That is interest on loan. Clear? Now, next one, it is interest received. Interest received also. Right? And dividend received. Dividend received means earned on investment in shares. That is also financial income. Interest received, that is also financial income. Interest on loan, this is the expense, right? Next one, profit on loss on investment. Profit on loss, profit or loss on investments means that arises due to buying or selling investments, means not part of regular business activity. Clear? So I hope this is clear to you all. Now let's see the unusual or abnormal in nature. So these are non-recurring and exceptional items that do not happen regularly. That is loss due to fire, flood or accident loss, and a compensation received. Sale of fixed asset means these fixed assets are not meant for resale. Selling them, it is not a regular activity, right? So this is a non-operating item. And like that, compensation received, that is received due to accidents or any legal claims or insurance, means not part of normal operations. Right? Means these all are the compensation received, that is the abnormal income. This not happens regularly. Clear? So these are the examples of financial in nature and unusual in nature or abnormal in nature. Clear? So these expenses or incomes, they are not included while calculating the operating profit. Clear? So, in simple words, it shows how much profit the business makes from its core business work, but before considering interest, tax or abnormal items. That is why we will call operating profit as earning before interest and tax. Clear? Operating profit means what? That is profit earned through the normal operations and activities of the business, that is buying, producing, selling, providing services, etc. And it does not include, means here while calculating the operating profit, we ignore the income and expenses that do not arise from the normal business operations. The examples are, we have discussed the examples also, right? So till here it is clear, right? Now let's see the formula. How to calculate the operating profit. How to calculate the operating profit. Clear? So first one, it is, here we are calculating the operating profit using net profit. So operating profit, it means what? Net profit plus non-operating expenses minus non-operating incomes. Operating profit means what? Net profit plus non-operating expenses, and we need to deduct the non-operating incomes. Now net profit, it means what? It means what? We have already learned, right? Net profit, it is the profit remaining after deducting indirect expenses from gross profit and adding indirect incomes. Clear? Net profit means what? See the formula. Gross profit deduct indirect expenses. This is the inclusion of operating and non-operating expenses, and add indirect incomes. This is the inclusion of operating and non-operating incomes. Clear? So here now operating expenses. Operating expenses, it means what? Operating expenses are the expenses incurred for day-to-day business operations. Clear? Operating expenses means the expenses incurred for day-to-day business operations. Means they are, for example, rent or salaries, office expenses. They are helpful for running the business operations, but they are not directly related to the production of goods, but they are helpful for, they are part of the production of goods. They are helpful in running the business. That is what operating expenses. And non-operating expenses, just now we have discussed here, right? Non-operating expenses are the expenses that do not arise from the normal day-to-day operations of the business. They are not related to the core business activities like production, buying or selling. Clear? Here don't get confused. Indirect expenses while calculating the net profit, that is the inclusion of operating and non-operating expenses. Operating expenses means what? Expenses incurred for day-to-day business operations like rent, office expenses, means they are helpful for running the business operations. But non-operating expenses, it means the expenses that do not arise from the normal day-to-day operations of the business. Clear? See, for example, examples of non-operating expenses are, see here we have already discussed, see, interest on loan. Interest on loan, this is the non-operating expense. Clear? Interest received, not dividend received, the profit or loss on investment. See here, loss on investment, this is the non-operating expenses. Means these are not arise from normal day-to-day business operations. Clear? And see here, loss due to fire, flood or accidents or loss. These are non-operating expenses. Clear? So one more, you add penalty. Penalty or fine. penalty or fine. This is also non-operating expenses. It not happens regularly. Clear? They are non-operating expenses. These are the examples. Operating expenses means arise due to that are incurred for day-to-day business operations. Clear? So these both operating and non-operating expenses, they are debited in the profit and loss account. Clear? So I hope this is clear to you all. Now net profit equals to what? Gross profit plus minus indirect expenses plus indirect incomes. And indirect income, this is the inclusion of operating income and non-operating incomes. Clear? Here now operating income. Operating income means what? It is the income earned from the normal day-to-day operations of the business, like operating expenses. Operating income means the income earned from the normal day-to-day operations of the business, like revenue from sale of goods, service income if the business, if it is a service business, right? And commission received as a part of normal business. Commission received. That is what operating income. And what about non-operating income? Non-operating income, it is not earned from the normal business operations. It is not earned from the normal business operation. For example, here we have already discussed, that is interest received, right? Interest received, non-operating income. Dividend received, non-operating income. Profit on investment, that is non-operating income. And here compensation received, that is non-operating income, right? So these all are non-operating income. So operating and non-operating income, we need to credit in the profit and loss account. Credited in the profit and loss account. And indirect expenses, we need to debit in the profit and loss account, and indirect incomes credit in the profit and loss account. And I hope these operating and non-operating expenses are clear to you all, and at the same time operating income and non-operating incomes are clear to you all, right? Simple. Operating expenses means incurred from day-to-day business operations. Non-operating expenses means they are not incurred from day-to-day business operations. Means these expenses, they are not happens regularly. Same operating income. It is the income earned from normal day-to-day operations of the business. And non-operating means it is the income not earned from normal business operations. Clear? So this is the formula of operating profit. Now operating profit equals to net profit plus non-operating expenses minus non-operating incomes. Here first we need to write down the amount of net profit, and here only we need to consider non-operating expenses, not operating expenses. Here I have explained the net profit formula. That is gross profit minus indirect expenses plus indirect incomes. Indirect expenses, it is the inclusion of operating and non-operating expenses. Indirect income, that is the inclusion of operating and non-operating income. But now the operating profit formula is net profit plus non-operating expenses. Means we need to consider only non-operating expenses and exclude operating expenses. And here minus non-operating incomes. Include means here minus non-operating incomes. Don't consider operating incomes here. Clear? I hope this formula is clear to you all. Now one more formula is to calculate the operating profit using net profit, that is gross profit minus operating expenses. Operating expenses. See here we should not consider non-operating expenses. Clear? One more formula is operating profit equals to net sales minus operating cost. Now what is the formula of operating cost? Operating cost equals to cost of goods sold. plus operating expenses. What is the formula of cost of goods? Goods sold, opening stock plus purchases plus direct expenses minus closing stock. Right? In the last class we have learned. Right? See here. Cost of goods sold means opening stock plus purchases plus direct expenses minus closing stock. Clear? I hope this is clear to you all. Now let's see one example. See here. The example is sales revenue rupees 2,50,000, cost of goods sold 1,50,000, means opening stock plus purchase plus direct expense minus closing stock, and operating expenses, that is rupees 40,000. Here operating expenses include salaries, rent, electricity, means they are incurred from day-to-day business operations. They are helpful for running the business but not directly related to in the production of goods. And non-operating income, say interest received, means this not happens regularly, that is rupees 5,000, not incurred from day-to-day business operations. Or the non-operating income means the income that is not earned from day-to-day business operation. And non-operating expenses not incurred from day-to-day business operations, that is interest on loan, that is rupees 10,000. Clear? Now we have to solve. First, here we have to find out the gross profit. How we will find out the gross profit? Sales minus cost of goods sold, means this cost of goods sold, this is the inclusion of opening stock plus direct expenses plus purchases minus closing stock. In the last class we have prepared the trading account, right? See, 2,50,000, that is the sales amount, minus cost of goods sold, how much? 1,50,000. So the gross profit amounted to rupees 1 lakh. Now operating profit. Here that is based on using, see here, operating profit here using gross profit, not net profit. Clear? Gross profit minus operating expenses. So gross profit how much? Rupees 1 lakh. Here we have calculated, right? Operating expenses how much? That is rupees 40,000 equals to, so our operating profit is rupees 60,000. Now one more formula using net profit. So operating profit equals to net profit plus non-operating expenses minus non-operating incomes. For that we need to calculate the net profit. How we will calculate the net profit? Gross profit brought down in the profit and loss account, we need to brought down the gross profit. From that we need to deduct operating expenses, add non-operating incomes and non-operating expenses. Clear? Because your non-operating expenses are also given, right? Means gross profit how much? That is rupees 1 lakh minus operating expenses 40,000, means indirect expenses. Indirect expenses means it is the inclusion of operating and non-operating expenses, that is 40,000. Non-operating expenses how much? 10,000. And non-operating income how much? Add, that is rupees, sorry, here 5,000. So equals to rupees 55,000. So our net profit is rupees 55,000. Now operating profit equals to net profit 55,000 plus non-operating expenses rupees 10,000 minus non-operating incomes rupees 5,000. How much? Equals to rupees 60,000. Same operating profit, right? Now last formula, operating profit equals to net sales minus operating cost. So operating cost means cost of goods sold plus operating expenses. Cost of goods sold plus operating expenses. Here our cost of goods sold is rupees 1,50,000 and operating expenses, that is rupees 40,000. See here, 40,000 operating expenses. So our operating cost is rupees 1,90,000. Now we need to calculate the operating profit. Cost of goods sold, sorry, net sales how much? That is rupees 2,50,000 and operating cost. How much just now we have calculated, that is rupees 1,90,000. So equals to our operating profit is 60,000. In all cases the operating profit is the same, that is rupees 60,000. Clear? So I hope this problem is clear to you all, but you should be very careful in segregating operating expenses and non-operating expenses, operating incomes and non-operating incomes. Clear? So I hope this topic is clear to you all. If you have any doubts in this concept, please leave a comment. Thank you.